Will we see another record year for gold, do you think?
I think, we have all the ingredients which are already being put together onshore in the United States under Trump. We see inflation continue to go up. Your forward curve in the Treasury already tells you have inflationary pressure because this onshoring is inflationary.
Yeah.
In Asia, we get the opposite. We got deflationary cycles, so you see interest rates being cut and cut and cut. So if you are Chinese today, your interest rate's going to go pretty soon to zero. Gold is the perfect ability to hedge yourself against low interest rates and currency debasement. So you have the central banks buying, you have the greater Chinese economy in the BRICS buying like mad through central banks and private, and that gives you the support basically on the precious metal.
Okay. Given that setup, what is sort of your price target for gold come year end next year?
Let's look first at this year end. I think we might still get a softer price into year end because the markets are very thin, they're tiny, they're quite ready actually for additional interventions and derivative trades, shenanigans. Next year, I think we're going to go into a different structure. We're going to Chinese New Year accumulation of precious metal.
Yeah.
This perfect season. So we're looking maybe a 2-4 downside risk versus what 3-5 upside risk. So your risk return metrics are actually quite nice.
Downside risk. I mean, higher bond yields and dollar likely to continue to pressure before we saw that PCE inflation print come through, or?
I think today's misnomer of low inflation in the world will backfire next year.
Okay.
And I think we'll have a lot of eggs on our face. And so we're going to get probably lower interest rate driven by central banks. But reality on the ground means that the cost structure for people on the lower income structure is rising dramatically. I think I just received my insurance bill. I think it's 14% up. I don't even know how they can claim 14%. So your basic needs inflation is going up and up and up. So forget about the government statistics, which are all basically fine-tuned to basically suppress your wages. So that's not a recipe actually for a sound economy and a sound structure, and therefore people are looking for alternatives.
Okay, so no doubt it will give gold a chance to make some more gains, as you say. Central bank buying, I mean, you and I have spoken multiple times throughout the year when we've seen sort of dips, particularly coming from the PBOC, and then they've sort of picked up their appetite for gold. How have you been watching these trends, and how are they sort of likely to drive the market moving into 2025? Do you anticipate that we continue to see this sort of ramping up from the likes of places like China?
I think the shift out of Western inventories into the East is continuing, and you see that every day. You can just look at the premiums paid in Asia. And sometimes it's India and sometimes it's the Middle East. But basically we have premiums. And that means your inventories in the West are getting emptied. Your derivative book on that trade is still there. So your leverage is going up. That creates more volatility. But it's over time pressuring the prices up by default.
Got it. You mentioned BRICS. I'm fascinated with this story, obviously, given I watch China. There's been a lot of talk, particularly even Trump sort of weighing into this with his threat of tariffs over his feelings about, this potential alternative currency. Help us understand how sort of gold factors into that and what you're seeing.
I think what we're going to get is a multipolar world on trade. And we go back to the old days where we are settling trade bilaterally instead of all through the US dollar. So that means velocity in the dollar is actually going to fall, which is going to make it really hard. It's going to make it really hard for the West because we don't produce enough of what we need. The dislocation on capital investment will be positive in a way for growth in the US, but negative for inflation. And in Asia, we get the opposite. So we get probably deflationary pressure in a certain way, and that's going to be, again, lower interest rates in an environment where my saving rate is now just gone up in China from 42% to 53%. So that saving is going to look for a haven which actually protects that savings. And as you know, in Asia, we love gold.